My. It's a production of Definitely in the House. My name is Moses and I'm definitely here to speak with Richard Wilmington, mortgage professor, is definitely in the house. Presents Loan Broker Academy, Understanding Mortgage Types, Part 2. Brother Richard.
Or they're selling the payment on the market, and what they're doing is they're enticing brokers to come to them as a lender. And so they're saying, hey, bring those payment option arms to us, and we'll give you 4 points. 4 points is 4% of the loan amount. We'll give you 4 points on the back end. Okay, well, 4 points on the back end, which is yield spread premium. That's the money that the lender gives to the broker. That's on a $500,000 loan amount, which is a median price house in California. $500,000 loan amount, that's a $20,000 paycheck for the broker. And that's without charging the borrowers any points up front. The borrower gets absolutely nothing, charged to them. They're, hey, we'll do 0 points, 0 fees, everything else, we'll pay for everything else. Well, they get a $20,000 paycheck. We consider this predatory. And you don't have to make that kind of money as a mortgage broker to make a good living. Go ahead.
I was going to ask this earlier, so...
Yes, Mr. Smith, but you're getting a 1% start rate. You're getting you into the payment option arm you want to get into. And yeah, I'm making $20,000, but don't worry about that. That's what the lender's paying me to bring this loan to you. But the problem is, in order to get that $20,000 on the 4 points, they're charging you a 3-year prepayment penalty. They're charging you a higher margin. The consumer, that's what the consumer's paying for. And the broker understands this, but they don't convey that to the borrower. They don't say, hey, you know what, we're going to stick you in a 3-year prepay, you're going to be stuck with this. When they recast this loan, you're going to be stuck and you can't get out of it, or you're going to have to pay enormous amounts of money to get out of this particular loan. You won't be able to do it, because the prepayment's going to be, in the range of, depending on what your loan amount is, could be in the range of $20,000 itself. Okay, go ahead.
So what line do you, as a consumer, what line on the HUD report do you see that on?
On the good faith estimate, it's right there on your good faith estimate. It shows.
Well, it doesn't say broker's profit is $20,000. What is it under?
Under yield spread, YSP, yield spread premium.
You normally don't see that until you get to your final statement, because you don't have to actually put it in your...
It's because a bank will include this in there. They'll include all this stuff in there. They don't have to disclose it. Okay? They don't have to. A broker has to disclose that this money is coming from the bank. Go ahead.
Richard, can you explain to everyone here how they have a right to ask?
Oh, absolutely. And it's incumbent upon you as consumers to, yeah, absolutely. You have a right to ask that. And you should ask that. And if your broker doesn't give you an answer on that, then guess what? You move on. You find another broker. Because he is being predatory. And if they don't understand this, which most of them do, but they just don't tell you because they don't want you to know about it. Okay, if they don't explain this to you, and if you do ask them about it and they don't tell you about it, guess what? I need to move on. I need to find another loan professional to handle my transaction, because I don't want to be stuck in a 3-year prepay when my loan recaps to a certain amount. Go ahead. Rate mortgage. There's a margin and the index. Margin and index. The margin is negotiable. The margin can be negotiated at the time that you're trying to get your loan. The index, wherever it is, that's what it's going to be. And if it goes up, it goes down, it's all over the place. The index, whatever index it is, we have no control over that. We can't negotiate that. But we can negotiate the margin if we get into an adjustable rate mortgage plan.
My question is, we've been talking about points.
To me, that's not considered predatory. I don't care what part of the country you're doing loans in. You're making 1 to 2 points. That's typically what the average is for most brokers that are ethical and doing a good job for the consumers.
Okay, so we should look for YSPs that are in the 1 to 2 point range and consider those reasonable.
Absolutely. And you're not going to know what the YSP is, by the way. You're not going to know typically what the broker could have charged you as opposed to what he did charge you. That information to you as a consumer is not going to be disclosed.
Well, how do we know that? I mean, how do we find out then that this is what they're?
Well, if you're in the industry, then you have access to the same.
Okay, I'm not in California. I can't
Exactly.
do your program.
No, I mean-
How do I find out?
Well, you have to work with a reputable broker that will hopefully help you to understand that.
You put me in a conundrum here.
Mhm.
You're telling me I have to work with a reputable broker.
Right.
You're telling me that a reputable broker should be getting in the 1 to 2%
Range,
range.
exactly.
But you're also telling me that there's no way I can find that out.
No, go through your broker. You can find it out through your broker. Contact your broker.
You just told me that I couldn't ask them.
No, you can
They
ask them
couldn't
anything.
tell me.
No, they can tell you. I'll tell my borrowers all day long. I'll say, hey, if you want to get this rate, I have to charge you a little bit more. But if you want to get this rate at 5.25%, I can get you that rate too, but I have to charge you on the front end. You can ask your broker that.
But you have to charge me on the front end. Where is that showing up? Where does that?
That's an origination fee. That will be 1% in order to do the loan.
Okay, but that doesn't disclose to me what the bank is doing to pay them on the back end.
But you can ask your broker that. If you were working with me and you said, hey, Richard, yield spread premium, how much are you making on that? You understand what yield spread premium is now, right?
Yeah.
If you ask me what the yield spread premium is on 6.5% as opposed to 6.25%, I will disclose that to you. I'll tell you, hey, I could get you, Nancy, I could get you this rate at 6, and I'll get a point on the back end. Or I could charge you this, and it'll be zero. It's at par. Par means that the bank's not going to pay me anything.
Okay. You've now brought in another term, origination fee. I've seen origination fees on
You're going to have to pay title and escrow and your appraisal, and then you got your recurring closing costs and your non-recurring closing costs. You got prepaid interest. There's a whole myriad of things. I can go down a whole good faith estimate and explain all that stuff to you, but it would take a very long time to explain. I might miss a couple items. That's all the stuff that's disclosed right there. The yield spread premium, that's the item that you don't see. You don't know that you're paying a higher margin. You're paying a higher interest rate for getting this type of loan. That's not disclosed to you. All it shows up on your HUD-1, your final HUD-1, it just shows up as a payment that's coming from the lender to the broker. And the reason why they got that payment is because they charged you a higher rate as a consumer.
Mr. Richard, it's Joy here.
Sure.
Okay.
But as
I
a
think
payment, when you
that
get your final
sometimes
HUD-1, it doesn't show up as a payment that's going to come out of your pocket. It doesn't look like it's coming out of your pocket, although it is, in the form of a higher margin, a higher rate. Everything else looks like, okay, I gotta pay for this, I gotta pay for title, escrow, appraisal, all that stuff. There's a whole list, a laundry list of things. The taxes, insurance, all that stuff, prepaid interest, all that. It all shows up on the list. The yield spread premium, which is paid to the broker by the lender, it doesn't show up. I mean, it shows up, but it shows up as just a payment from them to them. It doesn't say they're raising your margin, okay, to give you this rate. Go ahead. When it says 0 points, 0 fees, all that stuff, even if they say that they're paying for your closing costs.
No, they ever say that we pay closing costs, but the
Right.
premium is zero.
No, I'm saying that even if you do see that somewhere, that they're paying for your closing costs, they're not paying for your closing costs. It's not coming out of their pocket. It's coming out of the rate that they're giving you. Always. Okay? They're pulling it from somewhere. They could have given you a lower rate if they didn't pay your closing costs, but that's how they're paying for it. Go ahead. Your broker should be able to accommodate you. That the banks love the brokers on the wholesale side. And they're going to do everything in their power to go to the brokers and say, hey, use us. Use us. Please use our programs. Here's what we have. We have this incentive for your borrowers. We have this lower rate program for your borrowers. And so this broker is going to be inundated with sales and solicitation from a myriad of lenders. Okay? A lot of different lenders are going to be coming at these individual brokers saying, hey, use us, use us. And I was the rep the entire Bay Area. And I worked in the secondary market. I used to have to go after brokers sell my product to them and try to get them to come to me as a bank. And U.S. Bank, we're one of the largest banks in the world, you know, but we didn't have the best product. We weren't competitive. Our yield cap, our lending caps were so low that it didn't make sense to do loans in the Bay Area. You know, our lending caps were, you know, you'd have to be above 750 FICO score, 750 FICO score to get a loan for $500,000 in the Bay Area. Well, the average FICO score in the whole state of California is 640. That excluded most of my potential clients. Yeah, exactly. Moved to Minnesota, where the minimum or the medium FICO score is 710. That's the highest in the country. The highest in the whole country is 710, and that's Minnesota. Everywhere else is in the 60s. Okay? California's like right in the middle, 640 FICO scores. Go ahead. Does everybody in here understand what a stated loan is? Anybody? No? A stated loan is, you tell me how much money you make. And if it makes sense, if it falls within the range of your industry, your profession, I'm going to put that on the 1003. I'm going to put that on the 1003, the application, the loan application. I'm just going to write down that you make $100,000 a year because you're an engineer. I'm going to just write that on the application. I'm going to give it to the underwriter. The underwriter's going to look at it. They're going to look it up on wherever they look it up. They're going to look it up. They're going to go, $100,000, she's an engineer. You know what? That makes sense in the Silicon Valley. Okay, we'll go ahead and accept that. Well, what's the reality? She doesn't make $100,000. She makes $70,000. Well, guess what? That $70,000 is her gross. We go off of gross in the mortgage industry, gross income. What does she actually take home if she's grossing $70,000? 50 best. Okay? She's only making 50. We're putting 100. We're basing all of our information on qualifying this particular individual on her telling us she makes 100, and we're basing everything on that. It's not considered fraud, which is another thing, and joke to me, but it's not considered fraud. But when I used to wake up every morning and we talked about loans, when I was working at U.S. Bank, we talked about loans, stated loans. What do we call them? Liars loans. That's exactly what we call them. Because that's what they are. They're liars loans. If you could prove what you make, you would. You'd have some kind of documentation, tax returns, W-2, something. So you're basically lying about how much you make, and we as lenders are accepting that. We're saying, okay, yeah, $100,000, sure. If it makes sense, of course. You can't say, hey, I'm a checker at McDonald's, or whatever, and I make $100,000. No, that doesn't make sense. Go ahead. If you have a low FICO score, it doesn't stop you from getting a stated loan. Stated, 90% of the loans that are done in California, 90% are stated now. So yeah, you can. To answer that question, yes, you can get a stated loan. Wrap up. We'll take one more question here, then we'll wrap up, and I'll finish up. Go ahead. You're dealing with a lot of people that are in and out of the industry. 90% of the people that get in this industry, the real estate and mortgage industry, 90% are gone within 1 year. 90%, they're done. That's a horrible industry. I'll never stay in that industry. And why? Because of the challenges of education. You got to educate yourself in any profession that you get into. When you get into it, that's just the beginning. Okay, that's just the start. Getting your education, finding out what you need to get, that's where you're going to flourish. That's where you're going to be beneficial. That's where you're going to help consumers. That's where you're going to help yourself. Okay? So that's